Let's start out by talking about which time frame you should use to trade. For some Forex traders, they feel most comfortable trading on the 1 hour chart. This time frame is longer, but not too long, and trade signals are fewer, but not too few. Trading on this time frame helps give more time to analyze the market and not feel so rushed. But there are traders who could never trade on a 1 hour chart because they would feel like it's too slow. They prefer the 15-minute chart. Then there are some traders who feel like even the hourly time chart is too fast. They may trade using the daily, weekly, or even monthly charts. So you're probably wondering which time frame is right for you. And honestly, it 100% depends on your personality and your trading strategy. It is key to have your emotions under control as you trade. Of course, you may feel some pressure or frustration when trading with real money, but that's just natural. But you should never feel pressure that things are happening too fast or too slow, that you feel like you start making decisions on impulse rather than on analysis. The best way for you to find out which time frame you like best trading is to demo trade using different time frames. Once you have a strategy that you want to test, and we'll talk about that in an upcoming module about developing your own strategy, then you can test that strategy on different time frames, of course, on a demo account, and figure out what's working best for you. And you may be wondering, which time frame is the best though? You are the trader, so it really depends on you. It depends on whether you like to take your time on each trade or whether you like really quick price action. One is not better than the other. In this table, we've highlighted some of the basic time frames and the differences between each. Another thing to consider is the amount of capital you are trading with. Oftentimes, trading on shorter time frames is better for smaller accounts since your stop losses won't be as many pips away from your entry point. With a larger account, you could use larger time frames since you can handle the market swings without running into a margin call. Just remember to demo trade on several time frames for a while to find your comfort zone. Once you determine which time frame you like best, then you can start looking at multiple time frames to help you analyze the market. Let's talk about that in the next section, and I'll see you there.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.